I remember 2.5 years ago when I was taking my son to school, I was listening to you on the radio. You were the only guy who came. I remember your words. You said, "That's it, folks. Bull market's over."
What happens on Wall Street doesn't always impact daily life in this country. Many nights those closing numbers go right on by on this broadcast and people get up and go to work the next day. But the situation on Wall Street today was described as a bloodbath.
Now, breaking news here. Stocks all around the world are tanking because of the crisis on Wall Street.
General Motors and the end of its independence, which will be marked in a little less than 3 hours from now.
Lehman Brothers has filed for bankruptcy.
This is also a day of humiliation for a company that was once one of the most profitable and greatest American companies.
It lost almost $62 billion in the fourth quarter of last year alone.
Damon, when you look at what the market did today, did it put the fear of God in you?
Well, considering the fact that we were short, it was actually a great day for us. And we on days like this, we have to contain our enthusiasm.
Now, I understand, first of all, you are to be congratulated in how you've played this. You were short AIG, Lehman, Merrill Lynch until last week, and you closed out positions last Friday afternoon. Why did you close out last Friday?
We banked a lot of profits this last week, and really we've had an extraordinary year this last year. But when we came to that Friday at around 3:30 in the afternoon, you've got event risk, and you don't really know quite how it's going to go that Monday morning. We could have had a huge counter-trend rally today, or not. And huge counter-trend rally or not kind of sounds like a coin toss. So we thought it would be better just to bank the profits and lock down the profits. The driving force behind all of the financial meltdown is the fact that real estate is declining. And my gosh, I mean, if you look at the new lows list of stocks that are really getting selling pressure, one way or the other, they all seem to have the word mortgage associated with them.
The S&P Case-Shiller Home Price Index showed a decrease of 18.7%. The co-creator of the index says this decline may continue for some time.
There are 9 million houses about underwater right now. That's not subprime, and experts say that number could easily double.
The reason why real estate stopped going up is because the planet ran out of, quote, liquidity. Yet in the crazy go-go world of 2005, 2006, where the sky is the limit, it feels good and it can only go higher. And yeah, people are rooting for it. But you get to a point where I guess there are no more participants. They're all in. And that's kind of what happened, right? I mean, they're all in.
All right, sounds like it's still a dangerous environment for investors. So what do you do with your portfolio? It's time for our Market Week strategy session. Joining us here in the studio, Damon Vickers of 9 Points Capital Partners. The hedge fund he manages was up, get this, 63% last year.
We've got a bubble that was created with phony baloney money and IOUs. How does creating more IOUs and creating more debt solve the inherent problem, at least in the U.S. economy?
Okay, what is the alternative then?
The alternative is taking that $700 billion, or now $800 billion, or maybe 1.5 or 2 trillion or more before this thing all ends, and putting it into things that are vital for the re-engineering of the U.S. economy.
One of the stocks that we owned in that period was Amazon.com, and we bought Amazon.com. They sold books. There was a big question mark as to whether Amazon.com was going to transition into a company that did more than books, because you couldn't really have much of a valuation on an online bookseller. And would people buy things online? We now know, 10, 11, 12 years later, that yes, people do buy things online, and the story for Amazon.com developed. The stock the next year became the best performing stock in the stock market. Netflix broke a 6-year breakout to the upside and has been making new highs. I like that, number one. Number two, I know that the economic prospect of spending $50 to $60 for a family to take their family to the movies is not sustainable. That's crazy. That's before you even go into the popcorn. Netflix offers families the ability to sit there at home and get instant downloads of entertainment content. We know it's worked with iTunes, as they recently surpassed 1 billion downloads of songs. Could it work in the movie sector? I think it certainly can.
I basically just called to say thanks. I was one of your listeners a couple of years ago, and you said something that made a lot of sense back then, which was, if you're right and we listen to you, we maybe make 5% of our money. But if we don't listen to you, we could get wiped out. And I kind of took that to heart and put a lot of things into cash and into spare mutual funds